Making the world a better place and optimizing investment potential perhaps sound like they do not go hand in hand. But at HSBC Asset Management, we have long recognized that a company's environmental practices, social dealings, and corporate governance can impact investment returns. Around the world, ESG-related matters have taken center stage with social conscience and awareness about sustainability on the rise. Asia is no different as it journeys on a transition towards a greener and more socially responsible landscape.
In 2021, we already saw Asia issue a record amount of green, social, and sustainability-linked US dollar bonds, demonstrating that growth in the space is growing strong. Now, governments across the region are planning their path to net zero, and many Asian corporates are following suit. Due to Asian economies and companies' reliance on coal and their relatively heavier carbon emissions, there is much to be done in the region to get ahead on the climate action. The various targets and commitments being made will lead to higher demand for debt financing in order to support the green projects, which means that we expect to see increased and more diversified issuance of sustainable bonds in Asia. This certainly opens up a unique opportunity for global investors to take part in Asia's transformation through an ESG-enhanced Asian bond strategy, which also offers potentially higher yields versus other comparable markets. At the same time, investing in Asia ESG bonds does not come at the expense of performance, according to historical data. In our HSBC Asia ESG bond strategy, we are highly selective and have a strong bias for issuer with sound ESG practice.
One of the ESG factors that we look at relates to workplace health and safety, which is a key social issue. In an example of this, our analysis of ESG risks of the Chinese property developers found that their social factor score were affected by the health and safety concerns around the Chinese construction industry, rather than company-specific safety issue. There was also a lack of sufficient disclosure of health and safety measures. We share our findings with the developers. In the last 1 to 2 years, we have seen progress on the disclosure and an improvement of the developers' social scores. In general, Asian companies are still in the process of enhancing the ESG models. Importantly, our credit research team conduct forward-looking ESG assessment with an emphasis of ESG improvement through issuer engagements. For instance, we are engaging with some Indian financial institutions on the loan that are extended to green sectors, such as renewable energy projects and their strategies on decarbonizing on the loan assets.
In Asia, while there are gaps to fill and improvements to be made on the ESG front, the region stands to gain from sizable opportunities for sustainable development. In our HSBC Asia ESG bond strategy, our award-winning Asian fixed income team is focused on identifying opportunities that are aligned with the strategy's aim to not only achieve outperformance, but also meet ESG objectives through an investment solution that strives to lead a positive change.